Welcome to the Takeaways podcast. On today's episode, we are talking about a really important topic, and that's the challenges that are faced by early stage, be it investors or founders, etc. What are these challenges, and how does the ecosystem players trying to get around them? And I have a person who's right at the root of it, and that's the Mathew Marsden. He's the founder of startup Zeta, and he's been doing this for quite a while. He has engaged with a lot of the stakeholders, so we're going to get a lot from him about these challenges and how he and the team and everyone else in the ecosystem has been trying to get around them. Hi Matthew, good afternoon and welcome to the Takeaways podcast. To start with, right, for a person who has no idea about what Startup Club Zeta is, please just share a bit of a history of the community, why you started it, and how it's been going so far.
Yeah, so Startup Club today, I've had to try and get my mind around what it is these days. When we founded this business, it was a startup serving startups. We believe that the startup space is largely underserved, and there's a number of areas in which one can comment on that. I was a tech founder who'd raised some venture capital. I knew the struggles. We'd built product, taken it to market. Unfortunately, closed that business down for a number of reasons, which I'm happy to discuss with anyone privately. But realized that the space is largely undersupported, and that's not because there aren't big conferences. It's not because there aren't pieces of knowledge or advice online or great pieces of content, but building a technology business in Africa, and more particularly in this instance South Africa, is highly nuanced and does require a different approach on the ground. But certainly when it comes to building in practice versus building theoretically, a lot of that has to do with the power of one's personal network. Can we attract great talent? Can we meet with investors? Can we sell this on to customers? So much of that is a relational component. And I saw when I was a founder, there was a lack of ecosystem building domestically, specifically with respect to creating opportunities for founders to engage other stakeholders, meet them, connect with them, build relationships with them. So when we founded Startup Club ZA, it was very much back of a napkin idea. It was, well, if we could create these opportunities, these moments in which we could convene stakeholders in the startup space, what would happen? And so we tested the theory. We launched in a single city. It's now 3 years later. We've convened almost 30 events around the ecosystem. We've moved from some of the micro stuff onto some of the macro stuff, if you would. More than 10,000 people have attended our events over the last 3 years. And we now focus on, I guess, ecosystem-wide initiatives. So we run the South African Startup Awards every year. We host the country's biggest tech startup pitch event series. And in 2026, we will launch South African Startup Week, the inaugural Startup Weeks in Johannesburg and Cape Town. So really excited from an events perspective, but the business has evolved. We've evolved into a platform business as well. We've recently launched a tech platform that we built to serve and hopefully close some of the gaps we've identified for both founders and investors and everyone else in between in the space. It's a platform called Platform ZA, and I'm sure we will cover some of that on our talk today. And very excitingly, we've spent so much time on the ground meeting great founders, meeting great teams, that it positions us quite uniquely to be an effective early stage investor. And so hope to be investing out of our own vehicle by the middle of 2026. And again, we can comment on some of that as to some of the gaps we've identified and how we are hoping to solve for those gaps. So I best describe us now as an ecosystem builder because there are a few pillars on which we build, but I'm having the time of my life doing this, and it's a great privilege for us to serve the founder base.
You have built this incredible community in just a period of 3 years, right? There's a saying in technology and startup that trying to build a startup is hard, but trying to build a startup on your own is like 100 times tougher, right? How do you think that community that you have built, either through, like events or the awards themselves or any other initiative, how do you think it has contributed towards building this community of founders in South Africa?
I think people just need opportunities to convene. I think post-COVID, I was a solo founder, by the way, so I completely appreciate the incredible, brutal nature of starting a business as chief everything officer and not having a peer to walk that journey with, it is materially harder. Interestingly enough, that's one of the reasons I founded the network. Was I wish that I had the network when I was a founder. I wish I had access to other founders who were in a similar season, empathize with me, who could connect me, help me solve some of the big problems that I was facing. But really, it was all about relationships. It was, how do you create these moments in which people could actually connect with one another over common ground? The technology entrepreneurship space is still incredibly new on the continent. There's a lot of coverage and it's incredibly sexy, and fundraising numbers always hit the headlines. That's great, but on the ground for founders, it is a lonely journey. And so our core mandate was always to create these moments in which we could allow people to connect with one another. And I think that will always be core to what we do. So you ask how that's potentially influenced the broader community. I think we've created, hopefully, some local momentum, both in person now and online, in which people can not only engage key stakeholders, but I believe they get visibility that they wouldn't otherwise get. Incredibly important. You'll understand that the value of that for the startup space it's largely undercovered at times. And once you can actually cover great things, once there's increased visibility and there's increased access to the right people, gosh, the amount of opportunities, talent, access to capital, hiring, all of that kind of flows as a consequence. And we've started to certainly see a lot more one-to-one correlations between our work and that happening. Founders raising capital through people they've met through our network, through our events, engaged on a recurring basis, for example. I don't profess to have figured it out. It's no secret formula. We do this with the help of some fantastic partners, and we're a cog in a much bigger machine, of course. But it was simply the case of someone needed to play this role, and as long as the gap is there, we'll continue to fill it.
I want to get your view on this, right? You are right in the middle of the ecosystem. You engage with both the founders and investors, etc., etc. How would you gauge the state of the ecosystem at the moment?
Yeah, it's a great question. I think, again, we are very long South Africa, and so I will speak from a South African perspective. It's also a very interesting thing that most people gauge the momentum of an ecosystem by the amount of public funding that's announced, when actually on the ground, I don't think I have seen as much optimism from the founder base, as much propensity for risk and willingness to dive into the world of trying to start a technology venture. And a lot of that has to do with the barriers to entry are so low now. It cost me, I don't know what the dollar equivalent was, $60,000, R1 million to try and build a mobile app in 2022 and launch that to market. That same app would probably cost a first-time founder 5,000 Rand these days, right? And that's not because I didn't think I was sharp. I did that quite frugally, actually. But the nature of the market has changed. So I think with that infrastructure layer changing, you have increasing optimism. Of course, the nature of venture capital and private capital markets, ultimately capital will go where return can be generated. And because of this whirlwind and revolution of AI and technology, it's going to follow those hubs necessarily as rightfully it should, by the way. And there's a whole bunch we can talk about the nuances now of the capital markets and lack of liquidity in secondary stages, and a whole bunch that's impacting the free flow of that capital early on. But what I can say is, from being on the ground, speaking to founders, incredible optimism. I think folks have realized they want to build good businesses, not just good products. So this pursuit of revenue and profitability early has become a priority. In what is a comparably small nation like South Africa, even though we are a big hitter above our weight, we realize you want to build for as global an audience as possible from day one, if possible. And a lot of this sounds fantastic in theory and is hard to execute, but that's the nature of tech entrepreneurship, isn't it? If we're trying to compete on a global scale, you really have to be outlier individuals. So I would say to you, just as a final comment, that I've seen a rallying interest from almost stakeholders across the board. So really great founder pipeline emerging domestically. We see that corporates, I think, domestically have started to realize that it's probably far cheaper to throw money at innovators in order to drive their own internal innovation than necessarily go and build innovation internally, rather than empower external teams. And so I really do think that 2026 will be certainly South Africa's busiest M&A year on record, for example, from an acquisition perspective. And I see an increasing amount of private market capital looking to get into the early stage space. That doesn't necessarily mean it's looking to do so as a limited partner in a venture capital fund, but I think folks are beginning to realize if you want a return on money and you're willing to invest it early with some risk, the arbitrage opportunity is about coming in as early as possible. So I'm incredibly optimistic, or else we wouldn't be doing this, and I'm not naive to the realities of what it's like to build on continent. But that's the sentiment I've actually got from, colleagues up north, east, and west. There seems to be a really exciting theme in the air.
You mentioned an interesting point in that we tend to look at the funding as kind of like a gauge of how active an ecosystem is. But if you come to South Africa, right, I think the talent of people is really the greatest resource that you guys have, right? Because even if the funding, you are usually, like fourth or fifth there, in terms of businesses, like in terms of the exits, you do incredibly well. What drives this, like incredible talent to build a business that won't just grow for the sake of growing, but also like be able to either like achieve an exit or be able to list on the JSE? What really drives and like enables you guys to be able to look at the unit economics of startups and be able to get those right?
Yeah, I think I will say this: I don't think everyone's getting it right, of course. So I'm glad you've generalized us all. But I think South Africa, again, has this, of course, there is a complex history, but the one thing certainly in the last 30 years of democracy that we have been able to prove is that we can create a lot more value than our size justifies. And I'm talking as a general nation. We hit far above our weight on GDP production. A lot of that has to do with, obviously, commodities and infrastructure. But if you look at this tiny country on the tip of Africa, incredibly robust financial services market, fantastic tertiary education. So from a talent pipeline perspective, just probably the best time zone in the world in which you could be working for a foreign business if you wanted that exposure and to inherit some of that best practice. And then, of course, there is certainly a lot of capital, a lot of private market capital. So that environment makes for a very interesting intersection where I think people are increasingly globalized. They understand the world in which they live. A lot of the needs that are faced by South Africans, and it's clear that those same needs traverse borders. And so you're having to build for bigger audiences almost from day one than previously you might have warranted. I will just say to you, I don't know many companies that are still looking to exit via listing on the JSE. Domestically, a fintech, for example, Optasia has just listed, but that took many, many years, and still not a lot of people even know what that business does. So it's listed and it's created liquidity, but to what end? I think our M&A market has largely been private acquisition or folks looking to enter the South African market by acquiring domestically, and that's a great play. Now, is that a play that's going to allow you to build a $1 billion business? Probably not. But $100 million business, for sure. There's a lot of precedent for that, and I think you're going to see a lot more of that happen this year in particular. I can comment on this as a South African. We have we have an attitude in a good way. We are, I am not going to say it's certainly not an arrogance or a vanity, but it's almost like you're out to prove you can do it. And anyone who tells you can't do it, you're not going to get on well with that person. There is a confidence, and there is almost this dynamism that most South Africans will have that I've met, certainly if they're gutsy enough to dive into tech entrepreneurship. A lot of curiosity, and it's that grit factor which makes us great both on the sports field that most people will know us for and as entrepreneurs. That's hard to quantify, but that's also, there's this different spirit in the air at the moment, certainly even in our community right now.
Do you think that the success that the likes of Shuttleworth and the other startups who have done quite well in the past has contributed to this confidence to say, okay, a South African has done it before, I can also do it?
Yeah, massively, right? Massively. So much of actually what we're trying to build at Startup Club is about creating a case, creating precedent, if you would, and showing the world that there is precedent for success if one dives into the world of building a tech business from South Africa and trying to serve the globe. I think Africa more broadly needs more of that. We need more cases in which businesses have been able to be net exporters of what they produce. We shouldn't have to rely necessarily on a lovable out of Sweden to build some AI, revolutionary like AI business, and now that can reach you in South Africa. I think that we've got all the right ingredients on continent to be building those types of global scale companies. But domestically, I mean, you've seen this massive, it started with the likes of a Mark Shuttleworth, obviously a massive exit on continent. Dave Frankel, who obviously exited Internet Solutions and now is a super prominent Silicon Valley-based investor. Most recently, you see businesses like Rapid Deploy exiting to Motorola last year. And the numbers are astronomical in South African Rand terms, certainly. It's probably just another acquisition in inverted commas in the US, but in Rand terms, these are massive. So I think what's promising for me is that momentum begets momentum. And so as soon as one or two people prove it can be done, it's amazing how other people are inclined to jump in on that. So absolutely, the more success and that's why coverage, by the way, is so critical. It's why a lot of people say to me, well, Matthew, why does the ecosystem make so much fuss over a company raising $1 million? It's all about the funding. It's all about the numbers. No, it's because we've got to celebrate the small wins. This is a hard business, and the ecosystem needs that coverage so people understand there is momentum building and coverage building and interest. Yeah, exciting time.
You can correct me on this if I'm wrong, right? But as a community builder, you have to balance between being able to build a community, but also ensuring that you build what can be a business, right? Like a sustainable business. What challenges have you had in this regard, and how have you tried to tiptoe around those challenges to be able to grow the business over the last 3 years? Because let's say, if a business goes past 3 years, then it has done quite well for itself. So how have you been able to do this?
The stats, I throw the stats out the window because, most people don't appreciate we are a startup serving startups. And so in that, I think one of the reasons we've been able to create a proposition that's been so attractive for the founder base is because I get it. I have been both a founder and I am still a founder in this business. We wear the exact same concerns and excitements that our stakeholders wear. And so we understand the need intimately. When we started this business, most of it was self-funded. It's no different to another startup journey. And again, only through the power of knowing some people and having built some relationships myself, was I then able to start bringing on some partners to offset some of the resource costs or constraints that we had. I joke about this, but I'm also being very serious. The events business is an awful business. In fact, I would probably say that the events business is harder to build than a tech startup, because you need critical mass. You need an audience to buy in to what you're doing, but you can't get them to buy in until you've hosted several events. So it's this awkward chicken and egg situation. Even now, with us, having we've got solid social capital behind the events that we host and the initiatives we host. You can't make your money in the events business. If anything, you're breaking even. So, but what I will say is this, because we build across a number of pillars, everything, this for me is my acquisition cost, if you would. It's no different to, a technology startup investing in paid acquisition, whether that's ads or another strategy they employ. This is acquisition cost. How do I acquire great social capital, add tons of value so people understand we've got solid brand equity as a business. And then in time, our commercial upside becomes clearer. And for the first 2 years, I wasn't sure what that commercial upside was. But now that we realize we're in this unique position to be investing early, most of the work that we do is about trying to uncover the best founders the country has not yet seen and being able to get in on those cap tables super early. And that'll be the long-term value. With all that said, it's been a hard journey, man. I'm the first person to admit it. You are managing everything from cash flow to constraints to personnel, not dissimilar to any other startup. And there have been many a moment when you're like, is this worth it? I'm not sure. Now we are finally at this incredible inflection point, I believe, where things make sense and it's not as hard. Of course, that means it's about to get harder in just a new way. But yeah, I can't say there is one of the things that made Y Combinator famous, or at least Paul Graham, one of his most candid pieces of advice is simply just don't die. One of the secret sources of great startups is that they literally just figure out a way to stay in the market long enough and pay their bills long enough that they reach that point of clarity, whether that's product market fit or whether that's really understanding what their customer wants or figuring out the price point. I've had to spend the last 2.5 years, just not dying and making sure as long as we stay as close to the founder base as humanly possible, ultimately we'll figure out what their need is and how we can serve that need best.
And speaking of, like the inflection point, you decided to pivot. I don't know if you can call it a pivot, but you'll correct me on this, right? You went from being just a community to now being a full-blown platform. Can you just share more on what, advised this pivot and how it's going so far?
So listen, it's early days. We launched something called Platform ZA last week. It's been received incredibly well. We have almost 2,000 stakeholders that have joined that platform from 600 companies in the last week. So we're very excited about the uptake. I think, again, it's been inferred by two things. The first is that any ecosystem should have this. It should have a central hub for resources, for understanding what opportunities are, what events look like, who are the players. Every ecosystem almost needs that, and we live in a digital world. So you need that layer of digital infrastructure underpinning kind of the support you can provide to your founder base. So that was always going to be in the works, but you don't want to just create another job board or a blog, or it needs to be an actual tool that adds value to your founders. So, we spent 18 months in feedback loops and trying to figure out exactly what it was that the founders needed. How were we going to help them with coverage of their businesses or accessing the right talent? So we've built quite I would say it's a robust suite of tools that go far beyond just an online classifieds, that actually the feedback we've had thus far, founders love to use. And that for us is a great litmus test. But secondly, you can only host so many events. Ephraim, right? If I hosted an event, we've got countless provinces around the country. We have interest from provinces that we couldn't necessarily warrant hosting an event at or in. How do I still give those founders access to infrastructure and support? Well, the digital platform is an extension now of some of the in-person stuff that we do, and it allows us to really envelop and also understand the South African space. We don't know anyone yet who has tried to truly map the South African tech startup ecosystem and all of the stakeholders in that. And so you can start to see, as I talk through these things, there's a lot of value in that data, a lot of value being able to access one another. But, I will say this, the word access is critical for us. We do live in an ecosystem in which, like most, networks are pretty fragmented. Meeting the right person, knowing who the right person is, having a means of reaching the right person, it's increasingly hard. And if you're trying to build not only an innovative piece of technology, but also now you don't have that access, it materially affects your ability to build something successful. So for us, we think this is a great way to bridge the access gap as well. And I'm grateful to say that since being live over the last week, we've had a fantastic response locally. Again, we are trying to build deep here locally before we take anything continent-wide. We've had a lot of interest from around the continent. But we think if we can build this well, it's a great complement to some of the in-person stuff that we do around South Africa.
You spoke of an intention to map the ecosystem. Are you, in due time planning to launch perhaps like a data platform? Because I believe access to the data on who is building and what they're building, etc. Are you planning to do that in the future?
Yeah, it's a great question. It's definitely on the cards because data is very much a valuable commodity, as you and I both know. The problem is that data is only as good as its last update. And so for us, we've realized that unless you can create this almost living organism of a platform that is consistently engaged, updated, you have these different stakeholders participating and almost unprompted, then you're always looking back in hindsight at this 2020 reporting. In fact, I think one of the first times you and I engaged when I was building a fundraising data platform called Dealbase Africa. And, very interestingly, we were mapping, before the AI craze, we were mapping very manually a lot of the fundraising numbers and who the investors were around the continent. And ironically, most of the reports that were coming out, a lot of the same ones that still come out today that report on fundraising numbers, we saw them missing something like 35% of deals on the ground. That's not an immaterial number. In fact, it adds up to the hundreds of millions of dollars in time. So it's one thing to say we want to be a data business. It's another thing to be an accurate data business. So I would rather spend the time now creating something that really drives engagement. And then we can obviously spin out some of the insights that we see.
Okay, so now I'm going to put a blunt question to you, right? What's missing in the ecosystem at the moment? What's not there that you can point to and say, we really need to work on this?
Yeah, it's a good question. Yes, I reflect on this question, it feels like daily. And I'm not sure it's any one answer. I think the only thing you can look at is precedent from other ecosystems around the world that, at least on paper, have got it right. You know, people forget that Silicon Valley finds its origins in private family money and being able to back ideas that were spun out of universities. You know, that is the inception story of Silicon Valley. And ultimately that then allows you to pivot into starting to become, you know, processor builders and chip manufacturers, and then it becomes the Silicon Valley we know today from a software perspective. But I think, you know, there's a playbook that we don't always have to reinvent. I think South Africa does it quite well. I can't speak to the rest of Africa necessarily, but there is a technology transfer component here where, you know, our universities are so strong. People should be allowed to be investing in and truly going deep on the deep tech side of things. This is the sciences, the research development. We've got great universities, and we do have now a university technology fund, which is doing some amazing things locally and investing in some of these innovations. South Africa's biotech ecosystem is exploding at the moment, for example.
On that, I was at Stellenbosch 2024, and the amount of the innovation there, like, you know, especially in biotech, it's really amazing. It's incredible. And
it's globally competitive. So I think we have these sources of innovation which we are under tapping at the moment. Of course, other ecosystems have flourished because they create legislative routes to accelerating private capital into the space. And so, you know, obviously in Europe, in the US, as sophisticated investors, you can get a lot of tax incentive off of investing in early stage startups. We don't have that here locally. We used to, but it was definitely taken advantage of, and so the government to take that away. But that sort of legislation is absolutely critical. And then I think, you know, for me, one of the other things is that it's very easy for people to say that an ecosystem is not growing because of a lack of capital. I don't believe there is a lack of capital domestically. Gosh, we've got a lot of money floating around, certainly locally. And that's from high net worth families to asset managers. It's unbelievable how much capital is left undeployed. And so what an ecosystem like ours is sorely missing, one is precedent, cases that, hey, if I invest money, I'm going to get that money back and it's going to be 5-fold, 10-fold. As soon as you create a few cases of that, it's much easier to convince capital to be deployed. But secondly, venture capital is a classic model. LPGP 2 and 20 principal arrangements just do not work on the continent. I'm probably, you know, that might be a controversial thing to say, but as people are raising $30, $50, $60 million funds, these models don't work. There's no precedent, I believe, for a classic venture fund to work in Africa. In fact, most folks have raised this money. They're now deploying it. They realize, well, I can't deploy all of it because I get paid my fees out of the money I don't deploy, and I've got to pay my team. Creates a conflict of interest between the LP and the GP. There's a conflict of interest on exits and capital calls. It's a messy scenario. The classic venture model only works in an environment where there is a lot of secondary market liquidity, like a Silicon Valley, as in I can sell my position to someone else quite easily, even if I want to get out early before an IPO or an exit. And unfortunately, in Africa more broadly, there just aren't those markets. So one of the things we believe is sorely lacking is an alternative investment model that allows people to still access the space without having to commit into a 10-year fund relationship. And, as you would have seen, you need the right to win as an investor. Out of Europe now, you'll see 20 VC doing exceptional things. A16Z has just raised a $15 billion fund out of the US. So either you need to raise a fund that is the size of a country's GDP, or you have to be incredibly good at finding niche deals, accessing founders early, and then being able to add value to them via distribution or talent. So I think that what we need locally is folks to be thinking about the early stage investment case differently. They take advantage of their access to market, their distribution, they go deep in certain sectors. Those are some of the things I would say, that we're missing domestically. And to be frank, some of the things that we're working on very hard at the moment to try and solve for.
Let's talk about the ability to scale. If you raised a VC round, you're not going to achieve like a VC return from just your presence in South Africa, right? That's just a true fact, right? How do you think startups there should think of scale? I mean, you have seen the likes of banks scale across the continent. You have seen the likes of the MTN scale across the continent from South Africa. How do you think startups should try to think of growing by taking the lessons from those companies?
Yeah, it's a tough question. If I had that answer, I'd be a much wealthier man. I do think that the one comment I'll make is that we live in a time now where if you're founding a new business, you should be thinking about building for a global audience from day one. I think 10 years ago, even 5 years ago, it was quite easy to say, well, I'm going to build and try to win locally, and then I'll just take that same formula and see where it works, and then we'll start selling abroad. The global audience now is so intuitive and so in touch with what is globally on offer and globally cost sensitive, and the rate of the stickiness of customers is so low. They'll move from a ChatGPT to a Claude to a Gemini in the same week if they think one product is better than the other. And those are the big boys, the most funded companies of all time. So you look at this and you go, okay, well, is there any hope as a tech startup? Ultimately, if we're talking about trying to scale on very few venture capital dollars, nothing helps scale like sales, man. Nothing helps scale like sales, right?
I was talking to Clive on the podcast the other day, and he was like, if you're a founder and you don't know how to sell your own product, then you should not be doing this. Like, you should not be doing this.
Clive is famous for saying that, and rightfully so. But I think, the one thing is that the temptation, even, I remember when I was speaking on a few stages a few years ago, and the comments would always be, we're a Pan-African business, we're trying to sell to multiple markets. Whew, dangerous thing, right? And especially Africa, the nuances of the African environment, and selling to a customer in Kenya versus Lagos versus Johannesburg, so materially different. It's you can't simply scale by copy and pasting what's worked locally. But what I would say is if you can win locally and then build on solid revenue multiples and then be able to experiment into other countries where your customer looks adjacent or parallel to your domestic one, that's a different story, right? And I think this is the thing. The goal now is not necessarily venture capital growth at all costs. It is, it's almost like a sober growth. It's a calculated risk effort to be able to say, cool, we want to build an enduring business. My exit horizon is no longer VC exit horizon or multiple. And the irony is that so few startups that raised venture money are going to be able to exit with VC multiples. The companies that are building slow and steady are likely to be the ones achieving better exits anyway. And for the founders, they're going to control more of those companies, right? They've not had to dissolve too much equity in the process thereof. So, the world is changing. Does it mean you can't build an amazing tech startup and exit within 18 months? Of course not. I think if you build something, incredible, of course you can do that. There's just not much precedent right now building it from Africa. We have a few infrastructural levers that are not yet in place. And those are the levers that I'm pretty adamant to work on over the next 10 years.
And also like trying to build for a market where like you have 54 countries. I was talking to someone and they were telling me how like it was so easy for Speed, the streamer guy, to go from, these many countries in 28 days. But for me to travel from here to Senegal to Egypt is going to take a lot of visas, a lot of headaches. So really, Africa is not just like a monolith of a market. It's just a fragmented market. And trying to build for that is going to give you a headache and a half.
It's, I wouldn't wish that on anybody. I do think, and listen, are African countries trying to rectify that? Are they trying to implement free trade agreements and visa mitigations and things? Yes. But, ultimately, it's not common practice that African nations are one another's customers. Our biggest finance books come from Asia and the US right now. That's typically where we are servicing debt from. Ultimately, I can't remember who said it the other day. I was in a really insightful presentation, but, ultimately we haven't quite nailed how to sell to our neighbors. We haven't quite figured out how to sell to our neighbors yet. Do they need what we have to sell outside of commodities? And the irony is, if I'm willing to sell gold or coal or whatever it is from South Africa, the people that will pay a premium are not my neighbors. Those are people overseas. So again, we find ourselves in the same place. So I don't know. There's a lot of like macro stuff that is at play. But Ephraim, man, if we had to worry about all of those things, like I think the beautiful nature of the tech startup space is that founders are building in spite of constraints, and it's why I believe our founders are world class as individuals. They build in spite of what's around them, not because of it. And I think we probably create the best founder profile on continent and could bat above our average anywhere in the world.
So let's speak now on a topic that every tech person speaks of, and that's AI, right? You've thrown your head into the early stage investment kind of ecosystem. How do you think AI is going to play out in terms of trying to build out these startups who are going to really scale well and be able to create these really innovative products?
Yeah, it's an interesting thing because, of course, we sit on the greatest technological revolution of what is likely to be on my lifetime. What it has done is lowered barrier to access. Barrier to entry is virtually zero. If you wanted to be a technology founder on LinkedIn tomorrow, you could both spin something out and call yourself that. I think what it does reveal is, there's two things that I foresee happening in the next couple of years. One, it is going to put incredible emphasis on the qualitative skills required to build a good business. Because now, if you and I have the exact same product, which is going to become increasingly common, the ability to sell that to a customer is all about the qualitative stuff. It's the insights, it's the user persona, it's my ability to close a sale, to actually sell, relate, it's the empathy, the EQ. Ironically, all the stuff that AI can't replace, at least not for now. And so, that's the thing. It's going to put massive, the success of these companies is going to rely massively on the ability of their founders to attract great talent and to sell to big customers. That's often a personal thing, right? That's a personal development thing. And so that's not a commodity. I saw someone post about it on LinkedIn the other day. The interesting thing about all of these AI tools and how they're now being used is that you see the term that he used is it's almost like becoming the Temu of tech businesses. It's you don't buy premium stuff anymore. No one is trying to build the next Facebook or the next big, no one's building Anthropic using Lovable. But goodness me, I think the examples he was using is we're going to have 100,000 health and fitness trackers and 25 note-keeping apps on our phones. And so technology is becoming commoditized, but it also means that its use case is becoming commoditized. And so people are just going to be building a lot of the same thing. And the only way you tell the difference between a backable business and an unbackable one is going to be the founding team. So funnily enough, tech revolutionized, yet investment principles remain the same, as we back the founders and back their ability to create value and understand their customers better than anyone else. Those are probably the comments I would make to you, man. It's an incredibly exciting time. Of course, it means that I think people are innately inquisitive right now. My wife and I have just had our first child. We used a very poor baby registry app. She hopped onto Lovable within a couple of days and was like, I'm sure I could build something better. In what world was that possible? Now that world is possible. So it's incredible from an ingenuity and creativity perspective, but we're going to be limited by our ability as the people with the imagination to prompt something that is truly revolutionary on the back of things like that. And that's where it's going to be a healthy tension. It's going to be the separator between people that build truly extraordinary companies and people that just build another piece of technology in the market.
Do you think it's going to be a net good or a net bad for the ecosystem in general?
I would say to you, it doesn't matter what I think, to be honest. I think it's going to be what it's going to be. I do think it is an overwhelming net good for the African ecosystem, where access to the opportunity to do these things was so much harder than it would be in a Silicon Valley, or the price points were high, the reliance on third parties was high. It's just not so much anymore. It's kind of said, well, now all of a sudden the world is my audience, and I can build something that's actually competitive and robust. It's an exciting time, man. It's an exciting time.
So, the Startup Act, right? I mean, I think, if we speak on innovation, though it's something that we, as the tech ecosystem, don't like to talk about, policy plays a huge role, right? The Startup Act conversation has been going on for, I think, close to 5 years, if not more. Where is that going, and what role do you think is going to play in addressing the challenges that are currently there in the ecosystem?
Yeah, so I mean, on the one hand, the Startup Act committee, and I know several of them, they have an incredibly hard job, right? Lobbying for regulatory change is one of the hardest things I think anyone will try in their lifetime. So it seems impossible until it's done. You need a policy framework. If you truly want the space to take off, policy has to be one of the infrastructural layers, right? There has to be some sort of incentive from regulators, from finances, wherever it might be, that allows me to start a business a lot easier. And it can't just be I can register a company and I can get my tax affairs in order. It needs to be something that is going to increase my propensity for success, my chance of winning. I think one of the challenges that I've seen the Startup Act run into domestically is that the word startup is so broad. It's so incredibly broad. Half the time at our events or when I'm convening new partners, we're having to redefine for them what a startup actually is, in that it's not a side hustle, it's not an e-commerce business, it's not an SME or a franchise. So many different verticals under the entrepreneurial banner, and all of those are admirable. But a startup is, as we understand it, it has this innovation layer. It is this technology startup, this technology venture that is trying to reinvent or challenge certain things. Lower cost, improve access, whatever it might be. So it's incredibly critical that even within the current Startup Act, and I don't believe that in its current proposed form, I don't believe it currently serves those nuances effectively enough. At least for us in the tech startup space, it needs to be a lot more acclimatized to what is required for technology ventures to thrive on the ground, not just early stage businesses. And I think one of your big challenges, though, is that is a hard thing to, that's a hard thing to lobby for, because the tech space is still comparably quite small. We've got, I can't even remember what the numbers are, million SMEs or SMMEs in this country. I think the number is higher than that, in fact. It's much easier to lobby for regulatory change when you're trying to lobby on behalf of 1 million companies and not, 5,000 that comprise the tech space. So, yeah, I think, listen, it's a great point of departure. You've seen other economies launch tech acts a lot quicker and seem to be a lot more robust, because I think they've focused on their depth of niche. Let's wait and see. Of course, we've not had that opportunity, to be frank, to engage the Startup Act team too much. We'd be very open to doing so. And ultimately, as long as they are building with the input of founders themselves on the ground, it's one thing to build these acts in partnership with policymakers and other stakeholders. If they're not actually taking the input of founders on the ground, which I can't speak to, maybe they are. If we can do that, then I think we've got a chance.
As we close off our conversation, right, you've been, like a part of the ecosystem for a long time. You've seen it all. What advice would you give to a founder who's just, starting off a startup and they are so confused? They are trying to build, like a product that's going to, to take the world by storm. What advice would you give them?
Yeah, I mean, firstly, you're flattering me. I'm really, I'm neither that old nor have I spent that much time in this ecosystem. So I think the last 6 or 7 years only. But we've got around in that time. I think, the advice I would have for a new founder is not to understate the importance of being great with people early on. When we started this business, very much our model was around interviewing successful founders, folks that had exited, and trying to get candid learnings from them. You begin to realize that the only reason most of these companies have won is because the founders were able to pull on a valued relationship at some point in time, whether that was with the acquirer or a funder or a co-founder. And one of the challenges in a world where technology is increasingly commoditized is that most founders will over leverage on the product. They will care and sweat every detail of what the app looks like and how it works, and they will not care about or not care enough about getting this into the hands of actual users with whom they have relationships and bringing people on board and on the journey. I'd encourage them, if you don't know how do I meet these people, or, who are these other people building in the space, they're most welcome to join us at Startup Club ZA. They would thoroughly enjoy what we're doing.
And then what's next for you guys in the next few years?
Yeah, man, I'm super obsessed with trying to build. We've spoken a lot today about trying to create precedent. I still don't believe that the venture capital market has figured out how to be a great pre-seed investor in Africa more broadly. Some fantastic investors, but because of the lack of liquidity, most funds are moving closer to Series A and pre-Series A. Not a lot of folks looking to plug the pre-seed and seed stage gap. But ironically, certainly for first-time fund managers, which we're aspiring to be, that's where the value sits. That's where you can get in at great deals. That's where you can add a lot of value to the founder, help them actually refine the shape the business is going to take and what the product does. That's really exciting for me. And that's really the problem, that we're trying to build for at Startup Club and try to solve for, at Startup Club. How do we meet great founders and then go on to be able to back them with capital and the access that we now have to a national ecosystem? It's an exciting time, man. Let's TBC. If I come back on the podcast in 6 to 12 months, hopefully we've got some good news to report on that front.
All right, great, man. Look, I think it's great work that you do. I mean, you have said that you've not in the ecosystem for long, but the amount of work and the impact that you have done, you and the team, of course, have done has been incredible. And I wish you all the best in your journey.
Hey, Fram, appreciate you, man. Thank you for creating these platforms for us to tell our stories. And look forward to checking in with you soon.
All right, cheers, man. Have a great one.